Good afternoon, everybody. Welcome to the recap. I'm Laz, stepping in for Scott, the Red Dog Redler today. We're gonna got a couple things I want to cover today. Throw in a little bit of education here, some technical education, which I always like to do, just so everything is explained. It's a much different business as a trader when you understand what's happening versus guessing. If you're guessing, hoping, wishing, or praying, chances are you probably shouldn't be trading. That being said, let's pop into our charts here and let's take a look at the market. S&Ps. We're going to look at the spiders here. We have, and again, I've been doing this for about a week and a half, 2 weeks. You have this flat top resistance. A lot of traders were definitely watching, in the spiders, this 136 level, which we've tested. Today would have been the third test. Like most good trades, generally support or resistance works in a sense of a floor and a ceiling. The first time that a stock or an index breaks support, it generally will break support and then it'll snap back. So what essentially here is you think about this like a floor. You put your foot through the floor and then you snap back. Next time you come back down, generally that's when the trade actually happens. So what I think is we can expect here, and again, the volume today, so a nice volume surge on this down move. So big volume day, or above average volume, I should say. Breaking support and tailing up. Now this is short term, probably going to get a lot of the bulls back involved. Our averages are up here around 138, 138.50. It's our key 21-day EMA, still on the flat side. I want to see how this reacts, what the spiders do, or the market essentially does over the next 2 days. I think that'll really be the tell for lower prices. Like I said, I think there's going to be some sideways, tougher trading over the next 2 days. Watch to see what these averages do. If these averages start to come down and blanket the stock, you could see the market start to roll over. Again, a trending market, if we look back in time, has, rising averages, a nice 45-degree slope here, and you have support of the averages. In a weaker market, you're going to get the same thing, but your averages are going to have a 45-degree down slope, and you're going to have resistance at those averages. So be prepared, in the sense of wait for this market to set back up. I do think this is, a nice break of support today, a little snapback, not totally unexpected. You're going to see a lot of that in trading, where it'll break resistance or break support, snap back, but then the next time it, tries to trade through there in potentially a day or two, you'll see that cleaner down move. So that's what I see happening there, and we're going to pay attention to that in the days ahead. Let's take a look at Apple. As Apple really, for the first time, turned up a little bit. Again, this is nothing to get excited about. Still a very strong force of selling here. Undercut yesterday's low. We undercut the 561 just by maybe a buck or so. I think there's a lot of traders kind of sitting in here waiting to see if we can bounce off of this gap zone. We've now filled our gap. Tailing up today, again, this might lead to a short-term, a 3 to 5 day bounce here. So keep an eye on that trade as it develops. Again, you have these declining averages above. So I think the key for Apple is how price reacts when, these averages are above the stock, whether it's, a 3-day bounce into these declining averages, especially the 21, which right now sits around 586.5. So keep an eye on price over the next 2 days, as it could be a very good tell for what is to come thereafter. So you don't want to be shorting lows. You don't want to be chasing stock. Again, if you're looking for a trade, you could probably step into the long side here for a very, I guess if you have expectations for a little bit of a bounce over the next 2 to 3 days, we'll keep that on the radar as it develops. Again, Apple's a leader here, and Apple's one that you need to, keep close on the monitor as it is a good forecaster for what we can expect short term. But Apple, again, not a strong stock, not a picture of, something bullish. Short term, you might see, like I said, a short term snapback here in the cards as the stock is coming from 620 down to today's lows around 560. So there is some room to bounce here, not totally unexpected. Moving along, something a little off the radar that I've been paying attention to that bring up is Whole Foods. Again, the trade that I've, me personally, I've had success with, and a lot of the traders here at T3 Live, is the fade here on these earnings gaps. So if you look at Whole Foods, where you had this big price spike, post earnings, these are getting sold. So a lot of these good earnings reports that the market, loved 3 days ago, all of a sudden starting to turn down and, push into these gaps. I think the best example is LinkedIn. LinkedIn gapping up, substantially 2 days ago at that 120 mark. And then today, intraday lows, we saw close to 100. So, that trade has worked. I think this is something that you need to keep on the radar for the days ahead. Into these rising averages, big tail up today. Again, good volume here, good liquidity. Been a good place for the active traders. So if you're looking for active trades, you're looking for trade ideas, keep an eye on some of these post-earnings plays, Amazon, ISRG, some of the ones that had, big earnings gaps. There's been some opportunity there, and really been, if you've been on the VTF intraday, some really good call-outs in some of those symbols. Moving along to retail, we'll take a look at Lulu here. Lulu had a nice breakout. It's amazing what difference a couple days makes. Just a matter of a few days ago, we were talking about this big volume surge here in Lulu through 76 up to 80. Again, with this market, selling off, it's going to be hard for anything to hold, at the highs and build bullish patterns. Tailing all the way down and reversing almost 100% of that last move. So not exactly what you want to see here in Lulu. I think, at this point, if you're trading this stock, all bets are off. I would probably, get flat here. Don't try and spin it into something. This is where things can get very, very volatile and very, very difficult. So keep that in mind. At some point, another trend or another trade will develop. If you're trying to trade every day or every move or every uptick or downtick, chances are you're probably not going to get very far, as that is a very difficult way to trade. IBM, another earnings play. We talked about this last week, earlier in the week, in the morning call. I said, when the stock was hovering around 210, one of two things is going to happen here. It's going to either, rally up and take out prior 52-week highs right here at that 210 mark, or it's going to turn down and fail. And if it did, there was this, what we call this air pocket, or tradable void back down. It seems like, we might see a 1 to 2 day bounce here, short term, but it looks like it's going to try and, pull back to this prior support level, 197. So I think, what I'm starting to see develop here is, some probably more plays for the short sellers or traders looking from the short side, although we did see a nice snapback today in the market. Watch to see how that develops in the next day or two. Again, that snapback's either going to be another opportunity for the short sellers to come in, or the start of something, potentially back to the upside, of which we really can't make that call right here, right now, today. We need more data to support that. So as always, a planned trader is a profitable trader. Again, there's very, very nimble trades out there. You have to really know what you want to trade, where you want to be, and why. I think that makes a world of difference between a good trader and a bad trader, and for that matter, a good trader and a great trader. Great traders really know what they want to do and why, and everything's mapped out ahead of time versus, traders that don't really get anywhere or don't really have success, ultimately are always chasing their tail, trying to get ahead, but never really seem to, move forward. It's a series of hit and misses, and I think a lot of that is just having a plan in place, knowing where you want to be and why. As always, a planned trader is a profitable trader. I mean that wholeheartedly. Take care, and I'll talk to you tomorrow on the VTF.